Hi, everyone. How's everyone doing? Alexander, Marco, good morning. Hello, Arena, Hugo, Ren, Sansi. Okay. Sinatra, Amira. How's it going? Didier, Scott, hi. Laura, Paul, all of you Mavericks. Everyone doing okay? I thought I'd start off with copper.
We can't see your screen, by the way. Actually, we can see your screen, but we can see the. There you go. Thank you, Dale.
Thank you, buddy. I appreciate it.
Morning, bro.
Again. Hey, man. Good to hear your voice.
We have Mavericks. We need to find some gooses as well.
Yeah. Yeah. So, and not turkeys. Anyway, so you just check out this copper. I'm showing you the 4 hour, and this was a confirmed high, and this was a divergent high, and then look how glaring it is up here at new highs compared to the previous two. I like the glaring divergences where you don't have to put your cursor on the reading to know whether or not it achieved it, and you could just draw a downtrend line here. I have to admit that both copper and oil have really fought the dollar bounce and risk off that we had. Okay, copper moving up, oil moving up. I actually think that copper might be more vulnerable because I can't see a geo event that would it would be more like a force majeure or something on some copper mines. But in the oil, a lot of things can happen. I'm giving it a shot up here. You can see oil is also diverging on several time frames. Let's see how it looks on the 15-minute. Same type of thing. I'm not looking for a lot on the oil. And remember, we have NFP, so I'll be looking to flatten up and or have light positions going into the NFP. I think this week it might move markets with what's happening here. Pound, yeah, that's because the euro pound's still heavy. Euro's down 4. So good observation between pound and euro. You could see the two, and then this tells you everything, right? So when this is happening, the pound, of course, is going to hold up well. Okay, that's something I just learned from Sansi to check the Kospi. Is that the Korean index, Kospi? I never look at that. Maybe I'll start looking at that. Okay. So thanks for mentoring me, Sansi. All right. And I just want to take a look at the other metals too. I think yesterday was pretty significant when the market was falling, how the gold came off on this candle right here. And, we made new highs here in gold. And I'm looking for, I'd probably look for shorts in here, maybe around 1785 to 88. If we get one more pop up here, this looks pretty impulsive, and this looks like it's just correcting. And silver looks like a better short. Okay, it's down pretty good right now. I was looking for 2670. We only got to 60. We'll see if it holds and we could get another rally here. But the silver action is pretty negative if we start closing back under this. So I wasn't expecting this. But if you notice on the silver, also up here at the highs, we didn't confirm. So I think there's a possibility, especially if this happens, which it hasn't yet, would be a dollar breakout over 91.40. It's been turned back once, twice, got through it a little bit yesterday, so we'll see. That's really about all I wanted to cover were mainly the metals, and I think most of them are sales of copper right here and I'll be looking to sell a rip, maybe $10 rip if I get one there in gold. And now it's almost like a 40-cent sell. So, you know, this was a pretty weak retrace. And this is for you, Amira. You asked me about this yesterday or the day before, the SQQ, which is the triple leverage on the Qs. And it came out of the hole pretty good, stalled at the strike price that I own was a double, and we'll see if we can pull back here. NASDAQ and S&Ps are almost like two different markets now. If you look at the break that we had in NASDAQ, that's S&Ps compared to NASDAQ, and also the recovery. You kind of look at the recovery, and a much better recovery here in S&Ps. This is NASDAQ and the S&Ps here. See that? We're above the moving averages. And, you know, I'm thinking, even though I'm bearish, something I noticed on the 2-hour, I'm glad I didn't see it. Might have talked me out of being bearish and taking a shot on the short side. But look at this. So, you know, I can actually see a case where the S&Ps could make a new high. You know, 4220 was one of the Elliott targets, and I know her targets at 4,300 plus 4314, and we broke, what was this, 30? We broke 95. So you tack on 95 on this, and it's going to give you 4,300. Okay, so maybe this still occurs. But I think even if we make a new high in the S&Ps by 80 handles, this will not make a new high. It'll be pretty glaring if we go to if, and it doesn't mean that we have to, you know, maybe the top's in, but you're not going to see a new high. I would bet if we're at 4,300 in the SPOOs, that NASDAQ 100 does not make a new high. Okay, so we'll see what happens with all of these things, but today in particular, oil and copper, and I think that the precious metal rally may have ended for now, and you don't want to see silver back under 2580 again, where it launched for this move up here, and you take a look at a bigger picture. You know, this may have just been a stop hunt, but you know, you're getting 2 red candles in a row. This will be a 2-day reversal in silver. So, you know, I still think that we're destined to take out this low and give Stelios a buying opportunity around the 23 level, where you're going to want to back up the truck for that, should that happen. And Blake, how are you? I noticed on Skype you wrote a blog on metals and miners.
I did. That was me.
Yeah, you're barking up the wrong tree there, man.
All right. Well, the reason is I'm barking and howling is that if you look at gold, you know, making new highs for the move up here, and then you look at GDX, put in a failing rally, did not take out the same highs that gold did. I'm not saying that it can't, but they're lagging rather than leading. And I'd rather have it the other way around, with the miners making new highs and the bullion lagging. Same thing with Newmont. Okay, so I don't know if I'm barking off the wrong tree, but what did you say about the miners?
Well, you know what? Without Stelios giving away the entire blog, which I think you guys should all go read, but Stelios, what are your just some quick
counterpoints?
Well, first of all, we had Monday we had a really strong move, both gold and silver, and then yesterday with Yelen's comments, they got smashed. Then Yellen took back those comments, and funnily enough, equities are coming back, but metals are not, which is frustrating for longs. But anyway, my view is, if you look at the miners, if you look at GDX, for example, on the daily, the trend line has been broken. There's a descending trend line. If you go further out, a little bit further, it's been broken, and now it was retested. So basically, 3 sessions ago it was retested, and now we're trying to break. But my view is, obviously, you can have moves in the dollar, moves in risk off, and nothing is for certain. But I think it's a good time to be, because I have a long bias, it's a good time to be accumulating slowly. Of course, we could get the dollar spiking, or real yield spiking, and that will bring everything lower. But like you said,
something like this still.
Yeah, and the trend line actually goes further back as well. But you got it.
Okay.
You got it right.
Yeah, I see the retest and the moving averages, and it could be.
I mean, it's constructive. And,
yeah, it is.
And I think that you're right. Silver could go to 24, 23 and a half, 24. I'll be buying more there. But also, last but not least, Greg is also bullish. So that just proves my case.
Okay.
Well, there you go.
Yeah. Okay.
Well, I'll take over from here. I'll take over the charts, but I just wanted to say that you know what? Dale, can you and Stelios just talk one more second? I'm gonna make sure I tweet this because Mark Newton's coming today. So
nice.
Oh, your favorite guy.
I think I'm a huge Mark Newton fan. So
and
go ahead.
I write about this on the blog as well. You've seen commodities, pretty much every commodity just going wild. And this is going to manifest itself in the price of goods and services. It already is, but it's going to. So you have everything going higher. Inflation is here. There is no way that gold and silver cannot follow. Obviously, there are attempts to keep them low. We all know about that. But economics 101, maths fun 101, it just cannot stay down there. End of story. So that's my view. Obviously, I've been wrong in the past. I could be wrong in the short term, but I think if I'm doing all this unleveraged. So
I agree with you on the longer intermediate term. I just think that there might be one more jiggle to the downside.
Yes,
and I've been wrong about jiggles throughout my whole dating life.
You could be very right, actually, about that.
So I mean, that's just what I see. I thought yesterday's action was negative, and the fact that S&P's recovered, and that's a great point that the metals haven't yet, is interesting to me. So, we're not that far. I mean, it was a perfect retest in gold right here, right? Kind of like what you were saying in GDX still.
Yeah.
So, I mean, this is still the line in the sand. We actually took it out intraday, but never closed under it. So, I mean, you could be long gold if you're looking for much higher levels and just be wrong on a close under 1760. Nothing that's going with the market more than I'm always, against the grain most of the time. So, I mean, there's nothing bearish looking about this until it closes under 1760.
All right, sorry about that.
That's okay.
Yeah. I do.
Doggy.
Huh?
Doggy?
No. I wanted to get an email out or tweet out just because with Mark Newton coming in, I think Mark's a great. He is really great to listen to. I think he has a good picture of the overall view of the markets and a great technical view. And so I just want to make sure everybody joins in here in just a few minutes.
And he was sure right in February. He was bearish looking for a break. And remember, we had that pullback to about 37.30. I forgot what the high was then, but he talks both sides of the market. He's not permanent.
And he, what he also likes to pull up is DeMark counts, and it'll be interesting to hear if he has a view on equities at this point. I mean, obviously, if anybody follows the DeMark type of counts and looks for reversals, everybody's been citing a 13 count DeMark count for the last 10 years. So You gotta,
Blake, we have ADP in 10 seconds.
Oh, thank you very much. All right. Well, speaking of which, I'll just keep it on equities.
Doing my job, you see?
Look at you go.
You're
Okay,
is he on top of it or what,
Oops.
that guy?
Let's open the data flash and hold on. Oop. Here we
It's
go.
a little bit weaker.
The miss?
Yeah, a little bit weaker.
It's a little bit of a miss, which is interesting. We'll have non-farm payroll coming up on Friday. I'm surprised that we're a little weaker here. Now, this is one thing I want you guys to think about. Weak U.S. data is what? Good for risk. Just remember that.
Bullish.
Weak U.S. data is good for risk. You think about, look at S&Ps, they're hitting highs. Why is that happening? Dude, if the labor market is right now tight, the Fed Chairman Powell's only he's not even concerned about inflation. He's more concerned about jobs right now. Until we start creating 1 million jobs a month for the next few months, he doesn't care. You're not gonna hear anything about tapering while we're not creating 1 million jobs. So
you know when we'll have a job surge, Blake?
What's that?
After all, you know when I think we'll have a huge job surge?
When's that?
After all the support payments end in October. Because people will have to go back to work.
Oh yeah, I mean you know yeah, I mean
why are they going to go back to work before October when they're on the dole?
There
I mean,
go.
I
It's
like to work.
I'm getting paid just to sit around. So when they have to come back and
Yeah.
look for jobs, yeah, maybe
Right.
that's going to be it. And so if you guys keep sitting here going, oh man, that number wasn't great, stocks should come down. No, it's the opposite, guys. Opposite. If we continue to not create 1 million jobs, or we don't, the number is expected near 1 million. If we come in short of that this week, stocks are going to hit all-time highs, I think. And you can see the S&P here. I mean, let's talk a little bit about yesterday. And by the way, Yellen had to walk back her comments yesterday. After people were thinking, oh my gosh, she's talking about.
She forgot where she worked.
Yeah, she forgot.
She thought she was back at the Fed.
She did.
Oh
and as I was telling everybody on the daily roundup yesterday, if you were on the daily roundup, if you're a ForexAnalytix subscriber and you were listening in, I was telling everybody, look, she's not the Fed chair anymore. And right now, you got Powell, who is, yes, he worked with Janet Yellen. Yes, they
dated for a while.
I don't even want to think about that. The thing is the fact of the matter is he is as much as we could not imagine somebody being more dovish than Janet Yellen. He is more dovish than Janet Yellen. He is. He proves it time and time again. And on top of that, he is his own man. He is going to, this is his Fed right now. So, and he's going to, she may have his ear, but he's going to do what he thinks is right. And right now it's being dovish and, keeping the pedal to the metal right now. And so stocks recovered quite nicely. We are at the 618 retracement. I wouldn't be surprised if we break back above 4,200. Weak numbers like this, you're going to have everybody piling back into stocks today, and we'll probably rally towards 4,250 next. You know what I mean? So, Paul said, I'm listening to you, but how many times have we seen weak U.S. data, yet the currencies, the U.S. dollar then strengthens? Yeah, I'm just saying that if you're playing risk, I mean, look, stocks continue to grind higher. Stocks grind higher, dollar is going to weaken, generally speaking. And you're going to see it strengthen against like commodity currencies. So I want to talk a little bit about the Aussie here for a second. Then I'll bring in, any other comments from Steve and Stelios before we turn it over to Mark Newton. You guys know I've been sitting here looking at this Australian dollar as a head and shoulder pattern for a long time. We are now getting to the point in the Australian dollar that we are losing symmetry for the head and shoulder pattern. So if you guys, have been looking this setup, I mean, look, I've been waiting for the setup just like everybody else. We get up towards 78 cents, you sell a little, you get down towards, 70, 75, 76 cents, 75.50, you cover it up, you play inside this, the shoulder, you kind of navigate through it, you sell spikes, buy dips, that type of thing. We're getting to a point where we are, really losing the symmetry of a head and shoulder, which I'm not really comfortable with, right? And then on top of that, let me grab this. I'm just going to pull this over. Not that. Pulling the wrong thing over. Just trying to grab something. No. Help. No. Hold on. All right. You know what? Screw it. I'm going to do it this way. Here we go. Are you guys laughing? Because right now, this is like the bane of my existence right now. Here we go. All right. So there's your symmetry. Damn it.
You still got it, huh?
Yeah, that's we do good. For now. We do for now. And so, but here's the problem. Okay. And let's go into a smaller chart. Now, equities continue to blast higher. And if you look at the NASDAQ's moving up. We're at highs of the session right now. And also one of the things I was telling all the ForexAnalytix subscribers yesterday on our, on the private daily roundup webinar is, this rotation, you got to be careful with rotation, right? The S&P, the NASDAQ, the Dow, the Russell, they're not moving in tandem. And if they're all moving together, that's one thing. And if they're all going the opposite, you got some going in the opposite direction, it's just simple rotation. And that means they're still all in all moving up. Now, here's the problem with the Aussie. Everybody's shorting this Aussie with this triple top, right? We got a nice triple top here, but why don't we have a quadruple bottom right now with a false breakdown? Yesterday.
Yeah.
1, 2, 3, 4, false break, reversal. Why can't we go through these highs and really just stick it to all the shorts right now? It's totally doable, especially with stocks moving higher. I'm not long the Aussie. I bought it yesterday at 77.03 and I sold it last night before I left at like 77.10. So I mean, I'm literally made like 5 or 6 pips, something like that. Nothing to write home about. Because if you were in the chat room, you saw I was just like, I'll just be done with it for tonight. I just want to point out that it's not going down. And we did have a false breakdown overnight. There is a risk now for it to move higher, especially if stocks continue to move up. Somebody just said to me, hey, DJ said Euro US dollar is front running. Not necessarily. The Euro dollar is just sitting around the 120 level. And I think while equities move higher, the Euro dollar can, the dollar will eventually weaken and the Euro will move higher. But one of the things that it will happen in a risk on situation is you'll see the Euro Aussie break lower. And if you notice right now, the Euro Aussie has just broken a wedge, and I was looking at it as a bullish wedge. I was looking at it as a bullish wedge, and the reason why is when you have consistent highs and higher lows, there's usually the stronger possibility of it breaking higher, not lower. If I give numbers, it's like 60-65% of the chance we move higher, 30-35% chance we move lower. Well, guess what? We're moving lower. So, the minority odds seem to be, winning right now, but that's a risk on environment. We're seeing the Aussie dollar strengthen more than the euro, or outpace the euro. So, the euro Aussie continues to push probably back towards this channel support, if not lower, depending on where equities go. So just realize that we're seeing, in the currency market, we're seeing what interprets as risk on. So when you're out there trying to, sell risk, short stocks, just look at the outpacing of these commodity currencies. The dollar Canadian is at trend lows again. The dollar Canadian at trend lows, I mean, it looks like we're going to push towards channel support, which is, 122, 121.85. So, while we sit here extremely weak, and the Canadian dollar and the Australian dollar are extremely strong, you got to be very, very careful about fading risk. Now, I haven't heard from Steve yet. We've heard a little bit from Stelio. So Steve, good morning. How are you? Oh, he's not here.
Hey, mate.
Oh, hey. I was going to say your favorite Janet Yellen. She spoke some words yesterday.
and of course she did a 180 turn within like.
Oh yeah, I got to walk back those comments. Holy crap! Did you see what happened to equities after I said that?
Guys, the funny part was she said afterwards that she didn't neither predict nor suggest that rates are going to go up. So basically, why did you say it? That's the question. Anyway, interesting.
No, it really shows you. It really shows you how horrible these people are, in the sense that she has the experience of being the chairman or the chairwoman of the Fed, right?
Right.
She's been doing that for how many years was it? 4 years she did it. She knows that her comments, of course, do matter. Not because she's the Secretary of the Treasury. Nobody really cares about that, and it's a completely pointless position. But because she's also the ex-Fed chairwoman, and it has now become more than obvious that these two entities work together. And she should have predicted that there would be some risk off with what she said, which should be fine. I mean, we're in a market that just refuses to move lower, for any reason.
Yeah.
So now, irrespective of that, she couldn't even handle the idea of the indices being like 1% lower because of her.
Right. It's like, whoop, they're so buoyant. So, hey, and here's one thing I want to point this out for anybody who's trading currencies right now. If you know me, and actually, I actually had, who was I talking to the other day? I was talking to this group out of Australia, I was talking to this gentleman out of New York. I'm sorry. This analyst, most of you would know him from CNBC or whatever. And he's like, dude, you're all over the peso. And I'm like, yeah, the peso is like one of my favorite pairs of trade.
You're good.
And I'll tell you what, it is acting really well in this environment. So, we've come out of this wedge. It's very well bid. We've got higher lows formed on daily, weekly trends, and this is one of those currency pairs that, in the event that, like, let's say equities do roll over, and let's say there's no geopolitical, or there's some geopolitical event that just drives us lower, and we never get a blow off top, and we just kind of reverse back below 4,100 in the S&P, which I'm hoping is not going to happen. I hope we just go straight up to like 4,500 or 4,600 in the S&P like in the next week. That'd be awesome if we just ramped up like this, like hold on, I'm almost there. If we ramp up like this, whoops, over the course of the next couple of days, that'd be awesome. But if we don't, and we do actually just reverse course and break back below 4,100 in the S&P, you got to watch the dollar MEX, because the dollar MEX has just held up really well. And I think if we break above like 2035, 2040, we're going to squeeze the crap out of this market. So just a
Looks
little
a lot
heads
like
up.
the dollar.
I'm sorry?
It looks almost exactly like the dollar, the Dixie.
Yeah, I mean, we're just
That's pretty similar
here. But
yeah.
I mean, the dollar's holding up not too bad. I think Steve pointed out that we have this nice, consolidation, this nice triangle consolidation here in the dollar index. It is holding up. We break above this 91.40, and that should allow a move back to the 200-day moving average right here.
I just thought the two charts look similar to me.
Yeah, I mean, I guess they kind of do. When you look, we're making higher lows. So yeah, I'd agree with that, I guess.
Stalling at that resistance. Yeah.
Yeah. So, hey, Steve, Stelios, I want to thank you guys for being here. As always, and your comments and
Pleasure.
And Stelios, great blog on gold and silver and the miners. I think it's a read that everybody should read. It's a read that everybody should read. It's a piece that everybody should read. But I also wanted to mention, guys, please visit our Face webinar sponsor. It's Pepperstone Securities and Forest Park FX. If you're in the US and Canada, get cashback rebates through Forest Park FX. Make sure you reach out to them. There, you can talk to them via email or Skype right here at any time. Pepperstone Securities is one of the largest FX brokers globally. They're based out of Australia, but they got offices in London and wherever else. I just recently did a video with Chris Weston. This is not the recent one, but I did one recently with Chris Weston, head of research there. Last week, we just sent the email out yesterday, right, Steve?
Absolutely.
Yeah, email went out to our clients, and he's the head of research there. He's really a great analyst. So make sure you open your account, because if you open your account there, you could get up to 4 months free of ForexAnalytix and be part of our community. So, all right, guys, I'm gonna let you go. Dale, have a great interview with Mark. Mark's always awesome to listen to.
Thank you, Blake. Thank you, Steve. Stel.
Thank
Mark
you.
Newton, welcome back. How are you, my trading warrior brother? Welcome back to Face.
I'm great. Can you guys hear me okay now?
Yeah, you sound great, Mark.
Okay,
loud
thank
and
you.
Clear. Mark, before we get started with what's going on right now, I just want to acknowledge that the last time we talked, you were looking for some type of correction in February. Yeah. Got one all the way down to 37.30. The market held that line in the sand at 37. Great trade, Mark. Just want to acknowledge it. You called a very nice turn in February. What are you thinking now, buddy?
Well, what's interesting is that February brought about turns in the majority of world markets, except for really the U.S. market. I mean, we did see a minor pullback in technology, obviously, and in growth, but we still haven't made highs higher than the February peaks in China, in Japan, right, in India, in EEM, and a lot of these different things outside of the U.S. So it was an important time, and I think that's really one thing that it's key to concentrate on, is that when you look at things globally, it's not just really the U.S. that the majority, a lot of markets did in fact peak out. So here's really the key chart here, and just looking at technology versus the S&P, and this is really the big break, and you did see sort of a relative peak back in February, and now we've really completely broken down out of this pattern relatively. So, tech is 27% of the S&P. I think it's always important to, to take that into consideration. And if you look at can you see this chart? This is Gann's Mass Pressure Index, and we did show a minor peak there and a bottom in March and rally pretty sharply in mid-April. So now I expect that this actually plays out very similar to what we've seen in 10, 20, 30, 60-year cycles overlaid. When you look back at 2011, 2001, 1991, you do tend to see, weakness specifically from July into September of the year. So I think that's going to be this year's largest period of volatility, is going to start in late July. But I do think that the latter part of May has the potential to turn down pretty sharply. That could be our first 10 to 15% pullback. And
could we squeeze out a new high in SPX and not in NASDAQ 100? Because they're like two different animals. The charts, the relative weakness in NASDAQ 100.
You know, what's interesting is, let me see if I can show. I'm gonna. Let me see if I can do this real quick. So I'll just pull up a couple different charts here. It'll take me a second to pull up. I view the wave structure as likely leading to one final push higher. I think from March we've seen already, 3 waves up. We're in this sort of choppy fourth, and I think that we're likely going to push higher. And this is specifically just from the March lows. And let me see if I can pull this up real quick and give you a feel for how I sort of view the world. So this is
so the question was, could we get a new high in S&P?
I think we are going to get a new high. Yeah, I think S&P likely gets to 4,300 or so.
Okay, and NASDAQ most likely does not confirm by making a new high. What do you think?
I think the NASDAQ probably can still make a high if what I'm thinking is right, because this still should have one final move up. I mean, if you look at the chart, I view this as being, honestly, 3 waves up, and now we're trying to stall. I think this is a completed fourth as of this morning, and we should actually make a minor new high up to probably 14.4, 14.5 in the NASDAQ. And so that's going to really get a lot of people pulled up. But the momentum has clearly been dropping off. We've seen a lot of negative divergence. That's been pretty widespread for a while. Sentiment has been off the charts bullish, but we're really in the stage of the rally where sentiment doesn't matter,
Yeah.
It sometimes in normal markets, you get peaks and troughs in sentiment, and it tends to be effective. And recently, it just hasn't been something to really lean on to really think that's all that important. So
a cycle you've shown a few times, Mark, really showed, like the top being, sometime in April, and
Yep.
These are long-term cycles. So
Yep.
you're thinking we stretch till the end of May.
I think that's right. Absolutely. Yes. And that might be just one top, and then we actually pull back and we might be able to double test, potentially sometime. Who knows? But I'm thinking at least now that we, sell off into the fall, and so you have an initial peak in May. You sell off till June. You rally back, and then you really start. For those that are familiar of like the 7-year agricultural cycle known as the Shemitah year, that's coming together along with the presidential cycle, and both of those tend to be very nasty for the market.
When were you bar mitzvahed?
I'm not Jewish, but I have.
Oh, come on! I'm gonna right now. This is your bar mitzvah live on Face. All you have to do, Mark, is say,
absolutely,
"Today I am a man."
That's right. Shalom. I don't.
Shalom Aleichem. All right. Anyway. Baruch atah Adonai.
Exactly.
Like that.
Yeah, I've been to a few bar mitzvahs. That's the extent of my.
Okay, but you know what? You're a lot of people are starting to look at this. Came from what? The Torah code, right? The Shemitah.
I read about it actually in the Foundation of Cycles in their recent newsletter for April, and some guy mentioned it, and I had not put that together, but that combined with just there's a 41-month cycle, there's a 60-year cycle. So from 1962, we should have a pretty nasty 2022. That could be the majority of the weakness. That tends to be, in my opinion, one of the better longer-term cycles to study. Gann's master time factor concentrated on the 60-year. That's always important, but any given year, it's always key to look at the 10, 20, 30, and just do overlays.
One of my another guest was looking at the Shemitah, and I wanted to ask you, since you know Gann a little bit, I had another guest who said that years that end in an odd number, like we're in 2021, aren't usually good years for the market. Is that true?
Well, the majority of the study that I've done with that is largely just based on looking at years ending in 5 and 8 as being very good, years ending in 0 as being negative, and 2 typically can mark the end of bear markets. 1, I don't have any specific studies based on that, but
okay. So what are you thinking here? I don't want to interrupt your flow, but the dollar is going to play a role in this, isn't it? Do you think
I think
that
the dollar is going to start to turn down pretty sharply in the month of June. I think May typically is the second most bullish month of the year for the U.S. dollar index, going back since a long time. So January tends to be very, very good. May is the second best. Let me see if I can just pull up a chart real quick and on here, and we'll see.
I was thinking we had a chance to go to
I do think
95.
that this month is going to. I think this month is going to rally in the U.S. dollar index, and then I'm actually will turn very, very negative just after right around the 21st of the month. I think the dollar is going to start to turn down pretty viciously, and we'll have another. Yeah, this is not. Let me see. I'm going to stop this share and I'm going to reshare a different screen because I'll show you a couple things I'm looking at that are over here. I apologize for the breakup here.
You're the captain.
I'm the captain. No captain, my captain. So here's just this is a trading view chart. And I just want to make this quick point is that when you look at just the wave structure of the move up, this entire move is really just a three-wave bounce from the beginning of January. We had a very well-defined three-wave move up that began this move. So right from the get-go that any sort of rally here is really a corrective rally to the ongoing downtrend. And you look at the move just since we saw the peak back in late March, and it's been very impulsive compared to this move up. So I think this marks the end of an impulsive wave. We are starting a counter trend bounce. So I'm expecting that actually this probably gets to 92.5 or so, 92 sometime over the next couple weeks. Okay. And that would be something, it should occur if what I'm thinking is right in a three-wave fashion. You really want to sell into that. The move down after that would be much more extreme. Anything obviously under these lows would be just a chance to really get long the euro. I think, a lot of what Biden, not to get political, but I think a lot of the, China, Russia, a lot of these countries are making an effort to really get away from the U.S. dollar and get into the euro, and China's starting trading with Russia and looking at the ruble. So I think that the dollar, and say what you will about the deficit and $6 trillion in spending in 6 months, and obviously at some point that's going to be problematic. We'll see if the Fed gets put into a tight corner and is forced to use some sort of Operation Twist or something to, put some pressure on yields. But I think the dollar and yields both rally over the next 2 to 3 weeks, and that's going to be a chance to really go the other way and really get short the dollar. So I'm more of a dollar bear for at least until we make marginal new lows, and then you could see a little bit of a counter trend snapback. But I think the trend between now and the next couple of years, this is a pretty sharp decline in the dollar that we saw just since the beginning of last year, and should actually lead the dollar much, much lower. So maybe that's the recipe for what happens. So yields has just been tricky in terms of trying to sort of pinpoint anything. If anything, I look at this as being a little counter trend bounce. I'm actually betting on yields getting to 180 to 185 over the next few weeks before we actually turn down. And so yields and stocks likely are going to peak out and fall in the latter part of from May into June.
Okay. So from what you're saying, do you think we could have a bear market with dollar weakness? Because dollar weakness has usually, except I did notice this week when we had dollar weakness, that the market didn't make much hay out of that, which normally it did. So you're looking for a bear market in equities, which will be kind of like a bear market in dollar denominated assets, right?
Right.
Okay.
Yeah, that's a good point.
Interesting.
Maybe the real sharp decline in equities comes with the bounce in the dollar after we've already sold off very sharply.
Okay.
Certainly an important point.
Okay.
You know, commodities obviously have been red hot. It's still an area of real focus for me. I think you're seeing some really interesting movement in coffee and sugar, and those are a couple of my favorites. You know, I'm not
Corn.
certain, I'm not as bullish on the precious metals just yet. I think we need to test the lows, you know, before we can really.
Which lows? 1680?
Yeah, I think that this is just a counter trend snapback. I think you're going to have a final. So maybe this starts right away. May tends to be usually a pretty good month for gold. So I'm not sure how this is going to all play out, but you know, I'm just unwilling to really press long bets here. I look at seasonality as still being weak for gold really until the month of July through, you know, September, and I think that sentiment doesn't seem to be as pessimistic yet. A lot of people are trying to catch the lows in gold and think that you know, we can push up. I certainly have respect for the trend as having turned up a little bit, but I just don't know about the pattern. You know, I think we probably make a final push up to 1825, 1850, and then you peak and you sell off, and that's really the final sell off for gold, and that's a chance to get long.
Okay. Oil's been really fighting the dollar bounce and risk off in the market, as well as copper.
Yeah.
Copper to me looks like it might be in some type of topping mode. I see a 3 drive to a top formation completing in copper.
Yeah, I'm look, I'll believe it when I see it. I don't disagree that we're a little bit overdone, but you know, just tough to put a lot of stock in this peaking until we see, you know, some evidence of weakness. And yes, we are pretty overbought. And you look back at how you know, copper is traded, you're really right up near these prior peaks. So, you know, I think that the former highs from February 2011, you know, we're 10 years from that prior peak. That could certainly be important, but I'll hold off on getting too negative until I really see more evidence of this rolling over.
Are you following any of the oil shares, or WTI itself?
Crude. It's interesting because the one point I would make on crude is that, and I've started to use a little bit more, you know, Elliott in my analysis, and so I look at you know, the move down that we saw, I thought, into
May
from the month of March, when we peaked out, it looked very impulsive to me down, and then the move up has really been. So I view this as being sort of a 5-wave decline, and now I think this is really a corrective move, and really we should be finishing this little counter trend bounce. So if this is like an ABC up after the impulsive, then we could get another snapback to the mid 50s before the next move up. So that would surprise, I think, a lot of people. But that would. The key is going to be really holding below this peak. I think oil is really a low risk short at 67 to 68, and you know, we'll see what happens with the stocks. We've actually had some great outperformance in energy. You know, as you know, the growth has given way to value, and that's been largely energy and financials. And so, but I think if yields push up, that should help financials. So I'm not as you know, bullish over the next couple of months on energy. I think it's sort of a tricky spot because we've already had a very good bounce here, but you know, we'll see. Okay.
Anything else you want to talk about today, Mark?
You know, cryptocurrencies, we can sort of touch on that only because we've had, you know, a pretty good decline in Bitcoin while the rest of them have been sort of.
Is this a failing rally that we're getting in Bitcoin right now after that first big break?
I think I'm inclined to think it is, only because I have a few cycles that actually turned down really in the spring, and particularly into the month of June, July, and really don't bottom out until the end of the year. So I'm thinking that the move down in Bitcoin is, you know, a little bit more serious. And
I see like 35,000 as a possibility.
Yeah, I mean, I would say this, that the last 2 occasions when we saw monthly RSI get up to 90, on Bitcoin, where 2017 and 2013, both those occasions we saw 80% drawdowns from peak to trough, and so, I had a good amount of Bitcoin a couple of years ago. I actually sold it. I started getting out of it in January, February, and sold about 75% of it, right around 45,000. And obviously that's premature, but I just look at it as sort of not the best risk reward here. Obviously Ethereum has been the way to go in the last few weeks, but it's got, when you see RSI readings in the 90s with Bitcoin and knowing the cycles, and so I look at things like a 19-week cycle for Bitcoin that I think has been outstanding over the last 10 years. And it gave us the peaks in late 2017, 2013, and it actually peaks out right around now, and we should sell off. And the next good year should be right around 2023. But I don't like when weekly momentum drops off a cliff when monthly is as high as it is, and now you're seeing daily also start to really deteriorate, and structurally you're really starting to break down. So, if you're long, I don't mean to scare anybody. I'm looking at a deterioration of momentum at a time when my own cycles are turning negative on it. So I'm actually out of cryptocurrencies completely as of now, and think that it's going to be difficult for those to hold up if we do see some weakness in risk assets in the month of June. So, I think you have to use 47,000 as being a real stop for longs, or if you want to keep it tighter, 52 for Bitcoin. Ethereum has been the way to go, and I think also,
how about have you actually been trading Dogecoin?
I don't own any, but that's certainly
look at this crypto page. It's the first time you had a whole crypto page. Look at all these symbols, Mark. You've become a millennial.
Yeah,
what a transformation.
I certainly don't feel that young, but you never know. Any given day.
All right, well, just remember, if you're in Dogecoin, to bring a paper bag when you go out with it, and a leash.
You just have to keep stops tight on this stuff. I never pay attention to. I always use technicals above fundamentals. It's great if they both line up. I obviously have more respect in the long term for things like Ethereum and Bitcoin and Litecoin and Chainlink, but Doge, if you can just keep the stops tight, then look, it's still moving higher, and I'd probably put stops under today's lows and say if it gets under 53 cents, then I'm out.
Yeah, Blake has to hear about it all the time because his wife bought it.
Well, that shows you the age we're in. You have the CRTs, and now you have things like Dogecoin that are outperforming, Apple, and like some of our largest stocks are going sideways over the last 6 months, and the things that are moving are.
So let me ask you about this. You're a veteran. In 2000, we had a mania with anything in .com, but in your whole career, Mark, can you ever remember so many bull, and not just bull markets, parabolic real estate, people coming in, paying cash over the offer, commodities in a bull market, equities have been prolific, and then you start having things like SPACs and NFTs that I don't even understand, and Dogecoin. Isn't that emblematic of rampant speculation?
I mean, I have to agree that it is.
Have you ever seen so many parabolic moves in your career?
Who am I? Well, 1999 was one for the record books, where you go out and your mailman is driving a Lamborghini, and but I think we're at a similar age where I know a lot of people that are involved in the options market, and I used to be a market maker at the CBOE and have a real understanding of how option pricing works and implied volatility, and the majority of people I know that are trading options have no idea how anything is priced. It's just more, hey, let's buy some calls and it's going to go up, and it's like they don't know what strike, what volatility anything's trading at, and it's do
you believe that these social media groups like Reddit really have the power and influence in a market to be able to drive
I don't agree in the whole. I don't agree in manipulation. I think that supply and demand certainly should outweigh any group of people thinking they have any certain control over any. I mean, look at what happened in silver when they attempted that. I mean, look,
they went to SLV though. Yeah. But I know guys that used to take.
I don't think that anybody. I don't think news, rules markets. I think, good news. Bad news doesn't always happen at peaks. It's often good news, and you're seeing a drying up of volume. So it's not like there's a lot of people at the top that are shorting the market and it all goes down, and they're all buying at the lows and it goes up. I just think cycles tend to reflect, the ebbing and flowing of sentiment. And yes, at extremes, everybody tends to be wrong at the extremes. And so, I wish Mr. Kitty well with his GameStop. I don't necessarily share the optimism of the stock doing much more. I think we've seen a real implosion and implied volatility, and we'll see. The answer to your question is yes, of course it's speculative. The other answer is how can anybody try to pick the top of any of these until you're given really proof because of price behavior, and price rules until it doesn't, and that's more important than momentum, than sentiment, than seasonality, than anything. And so, you look at technology should be the one thing that everybody is paying attention to. And until you really see a breakdown in tech, then you're not going to have any sort of bear market. If anything, this is a chance to buy and think this is going to have a bounce. So, I'll pull in the reins in about 3 to 4 weeks. Right at the end of May is a time when I'm going to get very cautious, particularly on a move to new highs. I will start buying tons of VIX calls in September, and really take a lot of money off the table. But I think that, and that's me in attempting to pick the top, which I don't recommend to anybody. You need to see that evidence of price deterioration before you really ever get negative. And the NASDAQ led us up. The NASDAQ should lead us down. We've seen,
and it has been.
Yeah, I mean, you've seen some of the FANG stocks drop off a little bit, but that's more sideways action. That hasn't been substantial weakness. I mean, you have seen it in some of the software names recently, though. And so, I showed initially at the beginning of the presentation the breakdown in tech, relatively speaking. I would look at, if I had to recommend to anybody, areas to look at, I would say for to be long, I'd say look at the pharma space. I think pharmas act fantastic. They look really, really good. And that's a very defensive sector in an area where people can position long. I'm also looking at retail. I think that the vaccinations and the economy starting to pick up steam. This is going to be an area where if there's any area that gets a last hurrah, it's people going into malls and apparel stores and jewelry. And the patterns in XRT, to me, and it's not a perfect ETF, but I see a final push up in retailing and in the pharma space. And, I just tell people to take a look at long-term charts of Pfizer. Pfizer looks great on a short-term basis, and everybody knows that. But I would say go back to 2000 and look what's happening to, companies like Pfizer as it starts to move up to the mid-40s. And really, really interesting.
How about Russell? The Russell 2000 market hasn't made a new high in quite some time.
Yeah.
Is that a message in that? Maybe will that be able to eke out a new high with the rest of the market?
I mean, that's an interesting point. I think that you've seen the markets largely stall out over the last few weeks, and the Russell's stalled out over the last couple months. I just here's how I view the Russell, just looking at IWM. It's been sort of choppy. I can't. I'm definitely thinking you probably do have a final push higher to really test or exceed the highs, only because I'm still sort of optimistic for now. But I'll look, if we start to break down, then I'll respect it. And so as of now, you've seen a little three-wave bounce. I think you probably hold 220 on IWM and you try to push up and test the highs. And I don't like to make giant prognostications. I'd rather just
I know what you mean.
The day-to-day price action and say, it's bullish until it's not. And
how about this, Mark? Do the right thing today and tomorrow takes care of itself.
Exactly right. Follow the trends and don't worry about what the media tells you on anything, or yes, there's definitely
except when you're on CNBC.
some.
Hey, Mark, why don't you take the time now? People have been listening to us for half an hour, and when you're on CNBC, it's a snippet. So for people who can't get enough of your stuff, how do they go about keeping in closer touch with your ideas?
Yeah, let me pull that. I will show people very quickly. So I'm at newtonadvisor.com, no S, just Newton Advisor, and I will give you a quick here. Can you see that contact page right here?
I'm still showing. You'll have to do a new share, I believe. It's still showing the Russell.
Oh, okay. Yep. Let me see. Okay, I will. Bear with me real quick. So
here we go.
So yeah, here's my contact info. I put out, 2 reports every weekday, one at 5:30 a.m., one around 2 o'clock, that includes a technical video of really what's moving, what I think for the S&P. I do long and short picks also. So I have a regular service for institutions where I provide personalized information. I'm on Twitter. I have a private Twitter that's at Newton Advisors, ML Newton Advisors, that I talk about the market, pre-market, and longs and shorts I'm involved with. But for most people, it's cheap, and there's a lot of info in there. Happy to send you copies. If you go to newtonadvisor.com/trial, then you can certainly get on board for a couple of weeks and give it a test run. But yeah, happy to see if my work can be helpful to your day-to-day process. So.
Well, Mark, I want to thank you for your giving spirit, taking time out of the day to share your ideas that took you years to gain the skills, and sharing it openly here with us on Face. Thank you, Mark.
Thanks, Dale. Thanks to everybody. Thank you, Blake, for your kind words. And yeah, take care, everybody. We'll hope to see you in a couple months. Let's see what the market brings us.
You're in the rotation, bro. You know it. I'll get a hold of you. And, good hunting, Mark. And
that's right.
Really, it was great talking to you. Thank
Likewise.
you so much.
Thanks, Dale. Thanks.
All right, everyone. That's going to be a wrap. Remember, don't just count your pips, count your blessings. You could join the team for the Morning Edge in 15 minutes. Adios, amigos.